Hello folks, welcome back to the Edupedia world, and I am Abhinay Gupta, and we are considering the standards on auditing. And the specific standard under consideration for today's lecture is SA 500, Audit Evidence. Right? We have already had two lectures on this standard where we have covered in detail the topics like the objectivity, the definition, the evaluation of the work of the management expert, the procedures that the auditor has to follow to obtain the audit evidences, and such other topics. Right? Today in this lecture we will be covering the methods to obtain audit evidences and the comparative study. Right? So let us have a brief recap so that you are in touch, you are connected with the standard, and then we'll cover the remaining portion today in the lecture, and this will be the last lecture for this standard. Right? So we have seen the objective. The objective of the auditor is to design and perform the audit procedure in such a way as to enable the auditor to obtain sufficient appropriate audit evidence to be able to draw reasonable conclusion on which to base the auditor's opinion. Right? There is nothing much to explain, we have already explained it to you earlier. Then we have the definitions. Accounting records, audit evidences, sufficiency, appropriateness, and management expert. So you know basically what accounting records are. We'll move ahead with meaning of audit evidences. So audit evidence basically is accounting and other information, that means non-accounting information, which is used by the auditor to arrive at a conclusion. Right? And basically when we're talking about audit evidences, we need to obtain sufficient and appropriate audit evidence. Now what do you mean by appropriate and sufficient audit evidence? We have already discussed in detail. I'll give you a brief about that sufficiency and appropriateness are inversely proportional. Sufficiency is the quantum and appropriateness is the quality. Sufficiency depends on two things: appropriateness with inverse proportion, right, and ROMM, risk of material misstatement, with direct proportion. Right? Then appropriateness will always depend on the relevance and the reliability, and it is the quality of the evidence. Right? Then we have management's expert. Right? When we talk about management's expert, who is he? He is an individual or organization possessing expertise in the field other than accounting or auditing, whose work in the field is used by the entity to assist the entity in preparing the financial statements. Right? So how does the auditor basically evaluate the work of an expert? He basically first evaluates the expert. He evaluates his competence, capability, and objectivity. Competence is the nature and level of expertise. Capability is the ability to exercise his competence, and objectivity is biasness, conflict of interest, and the influence, right, that the management has on the professional and the business objectivity of the management expert. Right? How does the auditor check it? If he has a previous experience, he'll use that. Otherwise, he'll talk to other people who have the previous experience, or he'll go and directly talk to the expert and ask him about what is the qualification you have, where did you go, what is the kind of experience you have, what are the other clients that you deal with, and basic such stuff. Right? And if he has some published books or published document, he would refer to them as well. Right? Next, you need to have an understanding of the expert's work. What are the standards that you are following? What are the assumptions that you are following? What are the legal requirements that you are following? What is your special field of speciality? Now, if you are working well, I will also need to understand the nature of the internal and external data, right, or the information that the management expert is using. So there, when you have gathered the understanding of the expert's work, you go on to evaluate the appropriateness of the expert's work. How do you do that? You see how relevant and reasonable is the finding and conclusion. Right? What is the consistency of the evidences that has been obtained by the management expert and the evidences that has been obtained by myself, that means the auditor. Right? And then you see that okay, he has done the working for you, he has given you the data. Is that accurately incorporated in the financial statement? Right? We'll always also judge the reasonableness and the relevance of the assumptions and the methods that he has applied, and at last the relevance, completeness, and accuracy of the source data. Right? Then there are certain audit procedures that we perform to gather the audit evidences. They are risk assessment procedure, we have covered it in SA 315, test of controls, test of details, that is the compliance procedure and the substantive procedure respectively. Another substantive procedure is the substantive analytical procedure, and we will be covering it in detail in SA 520. Right? So this is what we have already discussed so far in the previous lectures. Right? I think it was a quick revision and you remember all those things. I did not waste a lot of time on that because we have to cover the remaining portion of the standard as well. Right? Now, moving ahead, what we see is the methods of obtaining the audit evidences. You have already done this topic in your IPCC as well. Right? So there are 7 methods of obtaining audit evidences and you have to learn those 7 points. You may be asked a question in the examination about the methods of obtaining audit evidences, and then you will have to write down these specific 7 points, which is inspection, observation, external confirmation, right? Then you have recalculation, reperformance, analytical procedure, and inquiry. Right? So these are the 7 methods by which you obtain audit evidences. Right? Now let us see each one of them in detail. So we'll go back. The first one that we have is inspection. Now, what do you mean by inspection? Inspection basically is the examination of the records of the documents. Right? How do you examine? How do you inspect? You check up the vouchers, you take the bills, you take the invoices, you check them up. If you're talking about inventories, go and see them physically, whether they exist, whether they're in proper conditions. So this is inspection. You inspect the data, whether it is internal, external, in paper form, electronic form, and any other media. Right? So when you inspect, you get evidences. So if for example, if the entity says that, sir, we have an inventory of rupees 2 crores, out of which we have the finished goods of 1.5 crores, raw material of around 30 lakhs and WIP of 20 lakhs. So you say, okay, you have so much of finished good. They say, although the quantity is very less, but the value is high, and we have around 150 quantities, and it is 1 lakh rupee per unit, for example. Then how do you inspect that? You go and you physically see whether there are 150 quantities. Are they in the condition? Will they actually be sold at 1 lakh rupees? That is inspection. Right? Next you have observation. So what is observation? Again, if I connect it to the same example, inventory count. So when you know that as per SA 501, where we have specific consideration for certain items and inventory is a part of that. So as per that SA, you are not supposed to perform the inventory count, but you are supposed to attend the inventory count when it is being performed by the management. So what do you do by attending that? You observe it. You see what are whether the procedure that the management has defined, is it being applied? Are they checking it? Are they actually calculating it? Are they taking the tag to sheet and sheet to floor? That is what you observe, right? Once you are at the position and once you see how they are performing it, right? So basically observation, it consists of looking at the process or procedure being performed by others, right? This is actually the word of the statute. Then you have external confirmation. Now what are external confirmation? All of you who have been to clients, you know that you take bank confirmation for the balances at the bank, for other terms and conditions, the rate of interest, the FDs available at the bank, what are the interest that has been accumulated over there, right? What is your current account? What are the balance with the current account? If you have FDIs, when are it being converted? For all these things, you take a bank confirmation. You also take other confirmations like debtor confirmation, creditor confirmation, to see the existence of debtor and the accuracy of the amount. So you send a written confirmation on the management's letterhead to the auditor or to the debtor, right? And what happens is, over there there are 3 types of confirmation that you send. Either you given the amount, please confirm it, or you give them a blank confirmation, please write the amount, or you give them a negative confirmation, reply only if the amount is not correct. So you will study about the detail of external confirmation in SA 505, right? But over here what you need to understand is, yes, external confirmation is also a method of obtaining audit evidences, right? Because if you have sent for example, you have sent the debtor a confirmation request, right, on the management letterhead that the outstanding balance of the debtor is 2 crore rupees, and the debtor straightforward denies, no, the outstanding balance with me is only 1 crore. How can they say 2 crore? And then you say, okay, now there is a conflict. The evidences that the management has shown me, the documentation, it shows it's around 2 crores, but the debtor says it's 1 crore. Now there is a point where I need to reconcile. So that is an evidence for me, right? That evidence helped me to basically doubt the evidence or the information that the management has given me, right? So basically when we talk about external confirmation, it is the direct written response to the auditor from the third party. That is the statement that you use. Direct written response to the auditor by the third party. So when you are sending the confirmation, you send it on the client's letterhead, but then you also attach an envelope and you say that okay, your response in that envelope to the auditor's address directly. And this basically was made a more strict procedure after the Satyam scandal, right? So in some free time we'll discuss about the scandal in detail, but try and understand that after that scandal the procedures for external confirmation was looked out with more serious and with stringent rules with that, right? So after external confirmation you have recalculation. So when you recalculate, you basically rejudge the mathematical accuracy. For example, if the client says, sir, we apply straight line method depreciation at 10%, you say okay, they showed you a big depreciation schedule and they say that 10% depreciation has been applied and this is the figure that we have obtained. You say okay, and you never bother to check whether that figure that they have used is actually derived if you apply 10%. You never check that. So that is the recalculation that you perform. You see, you calculate and see, okay, yeah, it is 10%. Agreed. Tick. Right? When you see the payroll, you have a lot of breakups. Basic, DA, this, PF, and blah blah blah, a lot of breakups. Medical allowances, traveling allowances, right? LTA, FLTA, HRA. You see, okay, there are columns, there are these limits, and you see, okay, there are within limits. When you see the HRA, you calculate it and everything. You do all of the things, but do you see the total? Is it actually covering all those columns? Maybe they skip a column in between, you never know. And you see, okay, the total over here is correct, the total in below is correct. And you say, okay, the payroll data is perfectly correct. No, you need to recalculate and see whether the total of individual balances and the total of the end is coming to that. Right? So this is the example of recalculation that you perform. Right? And the only word that you use, the important word, is mathematical accuracy. Then you have reperformance. That is when the auditor independently executes the entire procedure and he sees that okay, I'm getting the same evidence. Right? Basically, if I take the best example, then the white box and the black box approach that you study in CIS audit, that is reperformance. The auditor gives in his own data and sees whether the software is able to give the same output. Right? So if you go by the text, it says it involves the auditor's independent execution of the procedure or control that were originally performed as part of entity's internal control. So he will individually check. Right? So for example, I had a client that was into the multi-level marketing sector. So over there, whenever you make a sale, a reference sale, right, there's a lot of things that get hit. The commissions for the people for your referrals, the commission for the number of individuals, the distributors joined, the commission for the products, the quantity or the value of the product you have sold, right? And then what the level you have reached, according to that level also you get some commission. So I had to basically check that okay, if this transaction is being made, what happens, what is the shift, what is the change. So you reperform the entire thing and see whether the entire thing is going well, right? Then you have analytical procedure. We have already discussed in detail about the analytical procedure in the previous slide, right? So it is basically the evaluation of the financial information made by the study of relationships. And relationship can be among both financial and non-financial data, right? Then at last you have the inquiry. Inquiry is when you seek certain information. From whom do you seek information? You seek information from the knowledgeable person, the person whom you consider that yeah, this person may have this information. You go and seek the information from that person. That is an inquiry you make, right? And this inquiry is basically pervasive throughout the audit. Whenever you go to the client personal and ask him something, that asking is an inquiry. It is an oral inquiry. When you shoot him a mail, please I need these data, please give me an explanation on this, and he reverts you back on the mail, that is also an inquiry, and that is a documented inquiry. You have it on the mail. right? When you take written representations from the management, that is a result of an inquiry. So whenever you think that okay, you have asked something from the management and the management has said okay, yeah, this happens and this has happened, please make sure that you take a written confirmation for the same, because you are going to use that inquiry, the result of that inquiry, as a base for forming an opinion. And at the end of the day, if there is something that goes wrong, then you will be held responsible. So in order to save your back, what you do is that you take a written representation from the management that yes, you told me about this, you have informed me about this. Whenever there is an oral communication and you think that okay, this may have an impact, take a written representation. Otherwise, try to keep it on the mail, right? And then you will have to evaluate your response to the inquiry. Once you have made the inquiry, once you have gained the information, you will see whether you need to use that information. Do you think that okay, that was an accurate information, or do you think no, it's vague, I need something more detailed, right? Then you will have to evaluate your response to that inquiry, right? So responsive inquiry may provide the auditor with information which was not previously possessed by the auditor. You go in and you ask him, so what is the attrition ratio for your employees? He says it's 15%. Huh? But the data that I have, that shows 12%. No, we have 15%. And then again you go back and recalculate the data and you say okay, this is something that was missing, I didn't get the complete data. And the payroll guy, then he comes up and says that okay, so some data was still being accumulated, we were just trying to correlate the data, and so it was pending. I had written it in the mail. What happened is you didn't read the entire mail, and you depended on the same data that had come to you on the first instance. This is where you were saved, because now you know it was an incomplete data. How did you know that? That was a part of your inquiry, right? So that is the entire 7 method of obtaining audit evidences: inspection, observation, external confirmation, recalculation, reperformance, analytical procedure, and inquiry. So if it comes in the exam, please remember that you have to write down only these 7 words and then explain them, right? Now we move on to the last part of the essay, that is reliability of audit evidences. The first part, source outside the entity. Now tell me, you wanted the confirmation about some debtors, whether this debtor exists, right? And management comes up to you and management says, yeah, they exist, I have shown you the documents. You say, no, I still doubt. How do I check whether they exist? Management says, come on, I'll give you a written representation, I'll sign it, I'll give it to you. They make a written representation, they say, yeah, these debtors exist, we are confirming that, and they give it to you. And then do you depend on that evidence? Okay, that is a evidence, that is persuasive evidence, but what would be less persuasive? If you get that confirmation directly from that debtor, yeah, I exist and this is the amount for me, right? If there is any, now you want to see the trend in the industry, management gives you the percentage, so this is a 5% increase in the industry this year, will that be a relevant source for you? Or going to the real portal in the economy, that's a paid site, you go over there and then you get the evidences from there, then you get the percentage over there, that will be a relevant thing. Because whenever the evidence comes from the management, that can be persuasive, that can be changed, that can be altered by the management, right? So you'll have to see the source. So if that debtor sends the confirmation to the management and management gives it to you, it can again be altered. So you would want that, yeah, the debtor should directly send it to you, that is the source. The source is outside the entity, and that is more reliable as compared to the source inside the entity, right? Next you have, if related controls are effective. Now you are asking for some evidences, some data, some information from the client, right? You are trying to seek it from the data, from the ERP, but then you find that the controls behind that are not effective. So will you rely on that data? No, there may be material misstatement over there. But if you have seen and judged the control and you found that the control is very effective and there is very low risk of material misstatement, then you would be relying on that data more than the previous one, right? Then you have received directly by the auditor. Yes, now again we are talking about the external confirmation. Did you receive it directly, or did it route through the management? Did the experts, like the actuarial report, did it come to you directly, or did it route through the management? So anything routing from the management, like, their reliability decreases, because there is a possibility that management would alter it, would modify it. Bank confirmation. You had an FD of rupees 5 crores, right? You had sent a letter to the bank on the management's letterhead, and you have requested them to confirm it to you. But what they did is they sent it back to the management, and management comes to you. Sir, this is the document we have received from the bank. Bank says yes, it is 5 crores. See, the stamp and signature is accompanying it. There may be a possibility that they have printed it. You never know who has signed it. They may have got a duplicate stamp. That is the matter of fraud. And similar case happened in the case of Satyam. Right? So you will basically rely on those data that comes to you directly from the outside source. Right? Then you have evidence in the documentary form. Now, best example for this would be inquiry. Right? So when you go for an inquiry and they say, no, this has happened, this is the figure, this is the total quantity, these are the number of this has changed this year. They give you all verbal information. Would you rely on that? No. You'll tell them, please show it to me. Give me the document supporting your evidence, what you're telling me. Then they open their file and they find out, okay sir, listen, over here. This is where we have documented and this is the entire proof for that. So you will rely on the documented data more than what he has said orally. Because whatever he has said orally, he may tomorrow back out from that word. Or maybe he is not completely aware, he is just guessing an approximate figure. Right? So if it is documented, well documented, you will rely on it more than the document which are not very well documented. Right? Clear with that? Then at last you have original documents. So if the management comes up to you with photocopies, you will place less reliance on that. You will say, no, give me the original stamped copy. I want to see that blue color of the stamp. I want to see the signature with the pen. Right? There are many ways of attempting fraud while xeroxing the document. You can keep a paper on top of the body of the document and leave the sign, date and place and the heading. And that paper, that plain sheet that you are inserting has a different terms and condition, has a different information altogether. And then you place it in a correlation and xerox it and it looks like one sheet. There is possibility. So you will place less reliance on those data which are xeroxed or which are copies. If it is original, you would place more reliance on that. None of it is conclusive. You cannot go with an absolute reliance on any document. But at least the original document are less persuasive as compared to the photocopies. Clear with that? Is it good to go? So what are the 5 cases that you have seen? First is the source, whether it is outside or inside. If it is outside, it is more reliable. Then you check the related controls, whether they are effective or ineffective. If they are effective, more reliable. Then whether the data is received directly by the auditor or by the management. If it is received directly by the auditor, more reliable. Evidences in documentary form or the oral form. If it is in documentary form, more reliable. Evidences in oral, the documents are original or photocopies. Original, more reliable. Right? So these are the 5 things that you check. Right? So if we have a brief recap of the entire essay, then what are the things we have seen? We have seen the objective, design, perform and the audit procedure, significant appropriate audit evidence, reasonable conclusion and opinion. Then you have 5 definitions: audit record, audit evidence, sufficiency, appropriate and management expert. Right? Audit evidence, accounting and other informations used to arrive the conclusion, with basic content is appropriateness and sufficient. Sufficient is quantum, appropriateness is quality. Management's expert, you know who the expert is. What you need to check: evaluate the competence, capability and objectivity, and understand the expert's work, and also evaluate the appropriateness of that expert's work. Then audit procedure to obtain evidences: risk assessment procedure, TOC, TOD, test of control, test of detail and substantive analytical procedure. Then you have the methods of obtaining audit evidences: inspection, observation, external confirmation, recalculation, reperformance, analytical procedure and inquiry. And at last, the reliability of audit evidences: outside is more reliable, if controls are effective, it is more reliable. If it is received directly by the auditor, it is more reliable. If evidences are in documentary form, it is more reliable, and if it is original document, it is more reliable. Right? With that, we come to the end of SA 500, audit evidence. Right? So these are the general procedures that you perform to get the audit evidences. This is when you talk about evidence in general in all field or parlance, right? Next we'll cover up SA 501. Over there you have specific consideration for certain items, certain assertions, which basically is inventory, litigation and claim, and your segment reporting. So for that, in that essay that we'll cover up next, we will see the specific consideration apart from these considerations that we have already seen. So what is different, what is new, what is the extra, that we'll be covering over there. But whatever common things we have, like for example inventory, they've already seen a lot of things about inventory in this essay, right? So over there we only judge the completeness and accuracy and nothing else. Sorry, the existence and the condition and nothing else. The physical count, that is what we'll be talking about. Other things we have already discussed over here. So these two standards are basically related: SA 500 audit evidence and SA 501 specific consideration for selected items, right? So in the next lecture we'll pick up SA 501. So please stay tuned for that. Until then, this is Abhinay Gupta signing off. Thank you. Bye bye.